Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters podcast. I am going to talk to Mr. Nicholas Gerli today. He has been in real estate for the last 10 years, and I am personally following him for about, I would say, close to a year now. His videos from Reventure Consulting about data analytics related to real estate have fascinated me. So I'm always looking forward to his videos, and that's why I'm very excited to have him on the show. Welcome, Nicholas.
Thank you, Alpesh. I'm glad to be on here.
And feel free to add anything I did not specify.
Yeah, no, of course. So yeah, my name is Nicholas Gerli, and I'm the CEO of Reventure Consulting, which is a company that uses data and data analytics to help real estate investors figure out the markets and the neighborhoods that have the best combination of growth potential and investment security. Because real estate's still very much for most people in the Stone Ages in terms of using data.
Right.
People tend to just make decisions off gut instinct, which works sometimes, right? But having a data-driven narrative is really key, and finding those diamond in the rough markets right before anyone else finds them, getting into the markets that have the most growth. So I help clients and investors do that by using data.
That's great. Tell us something interesting or funny about yourself.
Something interesting about myself. Most people find this pretty funny, is that my favorite genre of music is heavy metal and hardcore music.
Nice.
So I like to go to, like concerts with mosh pits and things like that.
Oh, wow.
Yeah. Like, now that concerts are coming back, you'll probably, you find me there in the mosh pit or crowd surfing. So
interesting. I haven't attended those kind of concerts, but yeah,
no,
that sounds it now.
Everyone's got to go once. I say you go
really?
once. If it's not for you, then maybe you don't go.
Okay, if Nicholas is going, I'm going.
All right, we'll go sometime, Alpesh.
Yeah, let's plan it. Yeah, so of course you do all this analysis for data analysis for real estate investments. Do you personally invest in real estate?
Yeah, so right now I'm not invested in real estate. I sold out of my holdings. I had properties in Boston and New York previously, but I think the market's pretty overvalued right now.
Right.
So
most of the markets, correct.
Most of the markets, especially those two, right?
And San Francisco Bay Area, I'm right here, so
I'm sure you know, being in the Bay Area, what that's like. So I personally think the market right now is a bit inflated, and I'm waiting for my buying opportunity in the next year or two when the prices come down in certain markets.
That's awesome. So why did you start investing in real estate?
Yeah, so I've always loved real estate, right? I mean, my first job out of college was with a real estate investment fund out of Boston.
Oh, okay.
It was an institutional shop, so we would do big deals, right? Like big $50 million, acquisitions of apartment buildings and hotels or ground up construction. So I've always been in the industry, right? So it's just a natural to start investing myself.
Got it. And do you focus on residential or commercial real estate? Because they are both a little different.
Definitely different, right? I focus more on residential, right? Particularly with, Reventure Consulting, and the data analysis is, the highest and best use for it is trying to understand where the demand's coming for single family homes, for apartments, for multifamily. So that's kind of where my sweet spot and expertise is.
Got it. So that would also apply, I would say, to mobile home parks, because it's pretty much residential.
Yeah, exactly. You're basically asking the question, right? Like, what are the migration trends? What are the job growth trends?
Job growth and migration.
Right. Like, how many people are moving to these cities, to these counties, to these metros? And, what's that relationship against the existing supply of housing? And you can make it a little more specific, right? And tier it by, for mobile home or manufactured housing, obviously it's different income demographics, right? But the essential question, right, is all about migration, job growth. That's like really the two key components, as well as wages.
Okay. And actually that was going to be my next question. But I'll repeat it. What criteria should be used for real estate market selection?
Sure. So basically with Reventure, I've established something that I call the holy trinity of real estate growth and investment. And really that's trying to understand markets in three critical key factors. The first is economic growth, right? And that's what we just talked about. Jobs, migration, wages. If
Yes.
you're getting that, like you need that actually to have, like,
Yes.
let's just say a market that's going to have substantial rent growth or appreciation. You need that economic growth, right? But there's also additional components. The second factor is affordability and investment security, right? Especially
Okay.
now in what seems like the ninth inning of a housing
Yes.
cycle. You go to, let's say, a market like San Francisco, where the typical home price is 15 times what the average worker makes in the local economy, or the rental yield in a place like Salt Lake City is only 3%.
Right.
That makes it tough in those markets to invest at this point, right? Because if there were a downturn, you're more exposed, right? And so
Yes.
looking at investment security is also key, because you got to weigh those two together. And then the final thing is housing shortage. And this is where I'll speak positively of San Francisco, right? At least
Yes.
from a real estate investor's perspective, is they just simply don't permit enough new single family
Nope.
homes and
Nope.
apartments to meet the demand. Bad thing for society, but a good thing for like real estate investment in a certain way, right? Because if you don't permit enough new housing, it's going to put pressure on rents. So it's really those three things: economic growth, investment security, and housing shortage. Ranking every single market in the US in real time based off their performance in those, and then deciding, all right, what are the best ones for me to invest in?
Got it. And you mentioned one, I usually look at rent to price ratio, but you mentioned rent to yield ratio. Is that similar or different?
That's a great point. That's basically the inverse. It's the same thing. Rent price to rent ratio, rental yield. You're trying to understand how long you need to wait to get your cash flow,
Exactly.
right?
Yeah.
And so, what I think there's a misconception a lot of people have, where they think that the high growth expensive market is more secure. They think that like San Francisco or Austin or Salt Lake, they think that that market, because the prices are high and have appreciated, that there's more security. It's actually the exact opposite. That the more prices get above those rents, and the lower those rental yields go, and the more the prices get above wages, the way more insecure that market is in terms of like if there's a downturn, right?
Yeah.
Conversely, you go to some maybe markets in the Midwest that are not sexy at all, right? Like a
Yeah.
Detroit or a Cleveland or a Pittsburgh,
Yeah. Milwaukee.
Milwaukee. Those markets don't have good economic growth, but they actually have pretty good rental yields.
Yep.
And the relationship between prices and wages is much closer. So if there were, let's just say, a downturn in the next year or two in housing, as an investor, you would be more secure in those markets because you have more cushion, you have more cash flow,
Correct.
right? The local, and say you did need to sell, the local population would have actually money to be able to afford the sales price. And so
Right.
that's why it's so important in 2021 to consider that investment security angle, right? And that doesn't mean ignore expensive markets, but that security needs to be part of the conversation at this point.
That's a great point. And another thing I personally look at is not just, calling it as an expensive market, but buying something and putting all my eggs in one basket.
Yeah,
Buying $1 million condo versus buying $100,000 houses in Midwest is
yeah,
always a better choice. Even if one of them or two of them are not rented, the other eight, seven would cover my mortgage. This one condo, if it's not rented for 6 months, I'm screwed.
screwed. You're screwed.
Right. So just scalability, right?
That's a great point. There's so much unique risk to, like you said, in San Francisco, you buy a rental property for 1.5 mil.
Yeah.
Yeah. What if that neighborhood, what if just something in that neighborhood goes wrong? Right. Or
Exactly.
like something in that building. You're right. You do have all your eggs in one basket.
Yeah, so that's how I looked at it, and I feel like I was dumb when I started investing only out of state in 2015, because a lot of my friends kept telling me we have the best market, we are going to appreciate, and I said no, I am not looking for appreciation. Appreciation would happen over time if I'm able to sustain my investment using good cash flow,
Cash
right?
flow.
Because I
Totally
want to
agree.
survive any downturn, and appreciation will happen.
We're on the same wavelength there. Out of curiosity, I mean, I see what the numbers say on Bay Area jobs and migration and all that, but what's your personal experience being there over the last year to year and a half? Like, do you think that the outflow is exaggerated, or is it, is it just about right? People's perception of the Bay Area being kind of negative right now.
So great question. I think outflow is there for sure. I could tell and I can see. But the weird thing is that I live in the suburb. A lot of people during COVID moved out from San Francisco downtown and San Jose downtown into the suburbs.
Right.
So the suburbs exploded in a year, even though there was an outflow. It's just that, and I have so many friends who said that, oh, it's just market is going up, we'll keep both the properties. So they had a primary residence and they're keeping that one. So that's why the market, there is housing shortage, because these people have got, stocks from Netflix and Facebook, and they can sell and get 400, 500,000 for down payment. So they don't care. They're like, it was already free money.
This is a really interesting point you bring up there, because one of the biggest things that's stimulating the housing market right now is, well, there's an increase in demand, but actually the bigger thing is a shortage of listings and inventory.
That's what it
right?
is.
And the example you just brought up is something I've come across quite a bit, where a lot of people have purchased a second home in the last year, but they didn't sell their first.
Nope.
It's like naturally when you purchase that second home, you sell the first and that balances out the inventory.
Yep.
But more and more people are not selling their first home, or they're scared because of COVID and they're not selling.
Yes.
And you just wonder, it's like accruing this backlog of potential sales.
Yes.
Right? I just wonder how sustainable that is over the long run. And if at some point, I don't know exactly when, say there's a peak in the market or something, people will let go of those first properties they had and finally put those to market. I don't know what you think about that.
Yeah, you put the words in my mouth. This is exactly what I'm waiting for. And it's bound to happen maybe next year or in 2023 at some point, right? Because when the tide turns, when they saw that the house is dropping in value, that's when people run, right? When the blood is on the street. Because everyone wants to time the market and think, we'll sell it at the peak. But that does not happen, right?
That's a fool's errand, yeah.
But you're right. I would say about 20-25% of them are not selling just because of COVID, right? Because they don't want to move around. And so, there is always that perspective too. As soon as COVID ends, and I'm hoping soon with all the vaccine. Yeah, fingers. So as soon as it ends, we will definitely see, uptick in the inventory.
Yeah, I agree. It was interesting because you mentioned my YouTube channel. So I have my company, Reventure Consulting. We have a big YouTube channel where I put out multiple videos a week on different markets and, housing in general. And I get a lot of comments in those videos from people around the world. Actually. Right. And it's amazing. People from like Lithuania and Sweden and the UK and Canada, they all say it's the exact same thing going on in their countries.
Wow.
Right? There's like shortages. Housing shortages everywhere, a move to housing everywhere. And so I thought that was really interesting that, a country like Slovakia has the same home price appreciation as the US right now. And it causes you to question maybe some of like the common narratives that are spun to support the housing price, right? There's a lot of people say like, oh, well, the Federal Reserve is why prices are high, or like we haven't built enough homes, or why the prices are high. But if this is occurring in every country across the world at the same time, it speaks more to that COVID, push, right? The fact that people were scared, that other people wanted to buy. So I think it'll be interesting to see what happens worldwide. And I don't know, maybe we're in a worldwide housing bubble.
That is very interesting that you brought it up. And now I can relate kind of, because if you think for 3 months, almost the construction activity stopped.
Yeah.
Worldwide, pretty much. You can say that 3 month was maybe from March to June or June to September, whenever, right? And the second thing which happened is the lumber prices went up 400%. And actually, my partner and I are going to build about 10 new houses to sell in in Central California. And we saw the prices skyrocketed. So even a lot of the builders stopped building for now, just to see then so the housing shortage is not just one thing. Yeah, exactly.
Perfect storm.
Yeah. So the COVID helped somehow.
COVID helped for the short term. We'll see about the
Yes.
long term.
Yeah.
But,
Yes. No, that's pretty. This was great. So let's talk about the markets now. What are some of the best markets for real estate this year, and why do you think so?
yeah, that's a great question. So again, back to that Holy Trinity. I like markets that have good economic growth, but that aren't too expensive relative to wages and yields, and that also might have a relative shortage of new homes being constructed. And so it's hard to find a market that
Yes.
checks every single box, right? But
Right.
you're trying to find one that it comes close. And so what I'm finding is that a lot of Southeast markets are looking pretty good right now. I mean, I love Huntsville, Alabama,
Yes. Yes.
Chattanooga, Tennessee, Atlanta,
Oh,
Birmingham.
awesome.
Basically, that ABC triangle: Atlanta, Birmingham, Chattanooga, Huntsville, in between. I think that area is like very unique in that it has really good growth, but then it's still cheap and hasn't been as flooded with inventory as, say, markets like Austin and Nashville have.
Cool.
Yeah.
Austin, crazy. I put Austin right after Bay Area, Austin and Seattle. This is went brisk, but why I was laughing and seemed excited that I invest in those markets. I
Oh,
only
really?
invest in Southeast. That's
There
where
you
my
go.
mobile home parks, my duplexes are. Atlanta, Birmingham. I'm looking into Chattanooga,
We're
then
on the same page.
Mississippi, right there.
Why did you choose those markets? Was it for the reasons
Same
I?
thing. 5 years
Yeah.
ago, I kept looking, and I was like, okay, I was investing in Midwest, and I wanted to get out because I wanted to have direct flight to some of these places, and also wanted to come not have those winter issues. Right. That's how I landed in Atlanta. And then I started looking into everything around Atlanta because I could drive to Birmingham in less than 2 hours. So
Yeah.
I have my properties in Birmingham, Atlanta, then Mississippi. So pretty much that corridor.
It's
That's
super
how it's,
close.
yeah,
I mean, it's
exactly.
amazing. You can drive 1.5 to 2 hours and get to any of those
Everywhere.
cities.
Yeah.
Yeah, great. I
Chattanooga, same thing as you mentioned. Then Huntsville, 2 hours.
Yeah, I also like Fayetteville, Arkansas. I think like those Southeast markets are really where value is harder and harder to find, right? Right, in
Yes.
2021. And I think there's still value in those markets, as well as maybe in some Midwest markets.
Yes, I
Um,
think Kansas City and Indy are still good.
yeah,
I'm pretty sure you can correct me if you don't think
no,
so.
I no, exactly, exactly. Reventure, we have basically like this algorithm which takes data from the Bureau of Labor Statistics on jobs and the census on permitting and Zillow on prices and rental yields. We mash it all together and we update every month. We have like a list of the
Got it.
top markets, and a lot of the ones we're just talking about right now, Southeast Midwest, are in the top 15, top 20. And then, conversely, on the other end of the spectrum, the markets I don't like
That's where I was
are
going.
the markets I don't like are these fad markets, like these like flavor of the week. Like Austin's a great example.
Ooh,
Austin, don't get me wrong, huge economic growth. I mean,
yes.
no one can argue with that. But the permitting of new multifamily units has doubled in the last 4 years, and the rental market is already weak. And so you're saying to yourself, like, well, I know in a year or two I'm going to get crushed. I'm having to pay like a high price to get exposure to that. Markets like Salt Lake and Boise are in a similar situation where they're attracting so much capital,
Yes.
but they're building so many new units and prices are so expensive relative to what they were historically that it's just not you can't predict exactly what's going to happen. It's just not a favorable combination of factors for being an investor getting into those markets today. 5 years ago is a different story. If you got into
Yes.
right, if you got into Austin or Boise or something like 5 years ago, all right, you did a
Dallas,
good
yeah.
job. But I think that ship has sailed.
Hey, so let me throw you a curveball. I want to talk about the couple of states, especially. They are also going crazy. I want to know, what do you think about Florida markets, Orlando to Jacksonville to Tampa?
Yeah.
And the second would be North Carolina markets, Raleigh and Charlotte. They are also pretty much going up. So do you still think there is some juice left?
Yeah. So Florida, it'll tackle those separately. So Florida is really interesting, and the historical context is so important, right? Understanding, like, I always love to just look, how did markets react in the last downturn, right?
Right.
Florida obviously got hit really hard last time around, which has a lot of people, I think, somewhat skeptical of it this time around. I think the good thing today is that Florida on a relative price to wage ratio is much better now than it was 15 years ago. So it's on much more solid footing, and they're not permitting that many new housing units in Florida in general, right? They're permitting about 1/2 the amount of units on a relative basis as those growth markets like Austin that I just talked about.
Nice.
In addition, no state gets more migration than Florida.
That is correct.
People moving in versus people moving out.
Highest, yeah.
And so I think that combination, it makes me bullish on Florida. The one area I'm skeptical is that, all right, so Florida has great migration. They have poor what's called natural increase in organic population growth, which is from births exceeding deaths.
Okay.
So Florida actually loses population in that segment, but its migration is so good.
Is that because of hurricanes? Because that is the only reason I don't like Florida, Marcus.
I don't know. Hurricanes, COVID, I'm not sure. I think it's just it's an older population, you know.
Oh yeah, seniors, right? Because a lot of seniors move to Florida.
So if you go, conversely, if you go to Salt Lake or Austin, like they're replenishing the population organically. Like migration to Austin and Salt Lake could stop, but their population would still grow substantially because the births so outweigh the deaths. And that's more of like a 10 to 20 year thing, right? It's like obviously like a baby's born, it's not stimulating housing demand immediately, right? But having, I think, a good organic population is important. So I think in Florida's case, it just puts a lot of reliance on that migration, right? Like Florida's going to just have to keep like that space migration really, really high, which it might, right? Yeah. Like it might, but that's just like one slight concern I have is that as the population ages, some of the baby boomer population is dying off, that could create like vacancies in housing. And so, but overall, I'm bullish on Florida. And then North Carolina, I think Raleigh, it's kind of like Austin, super high growth. You know, Apple's building a headquarters there. Yeah. But next to Austin, Raleigh is second in terms of its permitting and building. So I think that's just going to make long-term appreciation hard when they're just building so much new supply. I'm a bigger fan of Charlotte. I think Charlotte has a lot of the same growth. Yes. It doesn't have quite as much new supply pipeline. So, you know, I think Charlotte would be the market in North Carolina I would target.
Nice. Yeah. And Charlotte, what I saw, well, and I may be wrong, is that they have had steady growth, not like crazy growth, where it just goes up 10, 20% every year. They have had steady growth in last 10 years.
Yeah, it's an important point. And I think especially in relation to tech, I think this tech's a two-sided coin. Obviously, it's providing a lot of growth, right? But again, this is where historical context is important. If you go back to 2001 in the dot-com bust, the markets that got hit the hardest in terms of job losses were Austin, Raleigh, Seattle, San Francisco, California, San Jose. San Jose lost 20% of its employment base over 3 years. Yeah. So I think I'm with you that incremental growth in a more diversified industry base, I'm more a fan of that because the tech stuff and like the rapid growth, it's great in the short term, but it can go away fast. Right. If things change.
Yeah. What goes up goes down, and it's in the same way, same pace, right?
Exactly.
So you already mentioned this, but before we started the podcast, are we in a bubble in every asset type? Do you think?
Oh man. I mean, I think the obvious answer is yes. You know, every metric. I mean, the stock market, cyclically adjusted PE ratio is near an all-time high, slightly below where it was in 2000. In the housing market, the relationship of home prices to incomes is back at / above where it was in 2006. So, you know, these fundamental indicators are saying, yes, we are in a bubble. And there just seems to be this continued suspension of disbelief that the Federal Reserve is going to be able to keep the balancing act. But if you look back at bubbles historically, at some point it breaks down, right? And there's not, you know, so from housing, I don't anticipate a 2007 to 2010 like crash. I think that was a unique situation. But I think there's certainly some markets in the US that are going to get hit hard, maybe see 20, 30% value declines in the U.S. housing market in certain places. Other places I think are going to be fine, are going to be flat or grow values. So I think it's just really regional as far as that goes.
Yeah, and that's another great point. And whenever I speak with investors or friends who want to get in real estate, is that it's every market is cyclical, but real estate is regional. That's the key. It does not go down like stock market. There's something happens with Brexit or COVID hits some other country, and the
Everything,
entire
yeah.
world stock market goes down. And I studied the markets like you, not of course as closely as you, but I saw that when San Francisco, Phoenix, Nevada, Florida, they all were going down, Texas barely nudged, right? Especially Dallas was down like 10%. New Jersey
Right.
didn't move, but New Jersey does not even go up at all, right? So, but it didn't have much correction. So you're right. It's all regional. So that's why you have to focus on the market and the MSA.
That's a great point. I love that you brought that up because I love studying that, those regional downturns last time around. And it's insane how, because people have this perception of the '07 to 2012 housing crash, as like you said, just like wiping everything out.
Yes.
But like in Huntsville, Alabama, actually appreciated by 10%.
Yeah.
Pittsburgh, Buffalo, Syracuse, Rochester were flat, right? Like, and so there was, like, and you said Texas. I think the situation might be slightly different in Texas now this time around, but certainly
Yes.
back then, you're right. And then you had Phoenix and Vegas at minus 55%.
Yeah, Bay Area minus 40, minus 50%. I saw it firsthand because I had owned a property. That's how I became accidental landlord, because I had to keep owning it.
When
And
did you
I
buy
was
it?
2007. And
Oh
it was
boy.
about it. The knife was falling. I bought it, and like in a couple of years, I'm like 40% down. What happened?
Now, were you able to, was there a place you lived or a place you rented?
No, that was my own place, very first primary home. So we ended up acquiring another home in 2011, and I had to rent the townhouse out because I couldn't sell. It was underwater. Yeah. So I didn't want to go ahead. So.
Were you able to, I'm just curious because two questions, I guess. One, back then, were you able, when you rented it out, to actually make profit from the, based on your original investment or your yield, I guess? And then two, today, is that possible anywhere in the Bay Area if you were to buy it?
So at that time, yes, I was making little over break even, I would say.
Yeah.
Right now, I don't think you could even break even anywhere in Bay Area. It has to be, minus 10 to 20% from your pocket.
Insane. That's crazy.
Yeah, it has to be at least that. So yeah, and that's why I got out as soon as I was able to break even from my purchase price in 2015. I sold that property. I learned in 4 years how real estate works and started investing out of state.
It's just so funny you bring that up because I feel like so many people have totally forgotten that the Bay Area got hit hard in the last crash. Like the amount of people who comment on my videos, like I've done some videos in California and whatnot, and people are like, "Oh, Bay Area real estate only goes up."
Right? That's what they keep telling me too.
Not true at all.
No, this was awesome. Let's take a quick break, and after the break, we'll go through the same questions I ask every guest.
You're listening to the Wealth Matters Podcast. The Wealth Matters Podcast. For more info about what we do, check us out at wealthmatters.com. It's wealth, WEALTH, matters, MATRS.com.
Welcome back to Wealth Matters Podcast. Nicholas, Gerli dropped a lot of value bombs. I had so much fun. So Nicholas, are you ready for fire round?
Let's do it.
Okay. Would you be changing any business or investment strategy after this pandemic is over?
It's an interesting question. I'm going to say no. And let me just caveat that. I think a lot of things have changed due to COVID, but I think the one thing I'm seeing right now is an overweighting of COVID level impacts, right? I think people are overweighting the work from home and remote work. I think people are overweighting, other types of secular changes. And so I wouldn't say like not at all, but I'm just to say be skeptical and do your research fundamentally before you say like, I'm just thinking in real estate, everyone's like, oh my God, invest in Austin because all the California people.
Right. Oh yeah.
Right? But like you gotta make sure to dot your I's and cross your T's based on this like COVID-based trend stuff.
That's a great point again, I could relate to Austin because I looked into Austin 3 years ago and I said no, because I'm like, it's done.
Yeah.
But my friends, just this year, three of my friends, they're like, do you want to invest with us in Austin? We are
No.
looking into it. I'm like, really, dude? Why
Yeah.
would you do that? I've been talking to you guys. So, but yeah, I could relate. Favorite real estate or finance or business book?
Yeah, this is an easy one for me. It's called The New Geography of Jobs. It's by Berkeley economist Enrico Moretti. And it came out like 2012, 2013. Basically talks about how the structure of how people moving around the US has shifted in the last 50 years, and how certain industries and areas have gained significantly, and then other areas, cities and states have lost significantly. It was actually that book when I read 2 years ago that really motivated me to start my own company and do data-driven geographic and real estate research. So New Geography of Jobs, Enrico Moretti.
So is that relevant in today's market?
Yeah, it's interesting. I would say so.
Okay.
It's maybe a little stale because it was all about kind of like flowing into tech hubs, right? Which is not necessarily like an investment strategy I would recommend right now, but the foundations of how he actually analyzes, right? Like demography and people moving around, and it blew my mind. And so I think it'll do the same for anyone else who's interested in real estate.
That's awesome. Any tool or website you recommend? Maybe you are using it for your data analysis.
Yes, sure. So when I talk about the holy trinity of real estate, the data I get is from three pretty simple sources. Bureau of Labor Statistics. They come out with monthly data on jobs and wages for every single metro area in the US, right? So you get that monthly, and then you get data from Zillow on prices and rents. You start combining those things, you can make some really powerful conclusions. So definitely Bureau of Labor Statistics for jobs and wages data, Zillow for prices and rents, and then the Census Bureau tracks new permitting by metro on a monthly basis.
Awesome. Thank you. Any advice for beginner investors?
Sure. I would say just have a fundamental strategy. The biggest, I think, mistake that people make, and I see this with a lot of my clients who are, more kind of novice oriented in real estate investors, they come to me and they have like 13 different markets they want to invest in, and like they're super all over the place, right? And what I help them do is like use data to just focus, right? Target the markets that fit your strategy and your profile the best, find that market, become an expert in it, and then, buy a property. I think honing the focus from the outset, especially with a data-driven approach, is really important. But I think some people just get stuck in the ether, right? They're just looking at 13 different markets and they actually don't focus or become an expert on anywhere. And so making that first step and really fundamentally determining the place in the area that you want to invest.
That's great. How do you give back?
How do I give back? All right. Well, this might be a selfish answer, but I think I give back through my YouTube channel. Because I probably spend like 20 hours a week making videos and giving, basically free data to people on markets across the country. I do a new video every single Wednesday on a new market. Just did one on Charlotte this week. Going to do one on San Diego next week. And so there's tons and tons of free data I have out there for people to look at. And so hopefully that answers a lot.
That's great. How can my listeners reach out to you?
Yeah, there's two good ways. One is that YouTube channel, Reventure Consulting on YouTube. Make sure to subscribe and check out all the videos. The other is my website, www.reventureconsulting.com. I have a lot of data, videos, and insights on there. You can also submit a contact form. I do one-on-one coaching. So if you submit a contact form and explain what you're doing in real estate, we can connect.
That's awesome. Thank you so much, Nicholas. Pretty much, I enjoyed the episode. I learned a lot, as well as I was able to solidify my thoughts about different markets.
Well, it was great. It was great talking to you, Alpesh. It was a pleasure.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing.